we're faced with 8 lifetimes of bad news occurring all at once. And it's just so much for people to take. But that's what happens when complex systems break down. Everything happens very quickly. And I've called this the quickening. We're in the quickening phase. We're in where the things start crumbling and people see how fragile they were all along.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Robert Kientz from Gold Silver Pros. Robert, thank you so much for joining us today.
Hey Elijah, thanks for having me back on the program.
It's great to have you. And I wanted to discuss today the economy. Now, it seems like we're seeing some data come out that is not very promising. The stock market seems to be pretty weak right now as we continue to make lower highs and lower lows. And it seems like we could be heading for a waterfall decline in the stock market. Your take on where we are right now in the U.S. economy and how the stock market is reacting?
Yeah, real quick on the stock market, I think it's reacting to not only a raft of bad economic data, but also the Fed policy to hike rates and the announcement, I believe it was on June 1st, that they would begin tapering their treasury purchases. So I think that the market is expecting during the tightening conditions and understanding that monetary policy is going to be eased off, that it's pulling back. And I think that's a lot of it has to do with the algorithms. The algorithms tend to cascade down because they all basically do the same thing. And that's the way the algorithms are programmed to work. And that's why you see sort of the pattern of the stock market basically for the last 10 years has been stair step up without stopping, a little small correction here or there. And then when bad economic data comes out or the Fed changes policy and changes direction, then all the algos trade down and they start selling off. And that's essentially what's happening. I think the NASDAQ was down last time I looked 34% year to date. You saw Bitcoin down even more than that, but down more than the U.S. stock indices. So I think we're officially in correction territory in the stock market and in most of the cryptocurrencies. There is a raft of economic data that's comes out every month, but there's been a raft of economic data that's come out in the last week in particular that shows that we're heading toward a recession. Of course, Kyle Bass is out in the news calling for a recession this year as well by the end of the year, so I'm not the only one. But look at the economic data we've had in the last 7 days. The S&P Global U.S. Manufacturing Index PMI is down. The Global U.S. Services PMI is down. Durable goods orders are down. Core equipment capital orders are down. And these are both from last month and from economists' expectations of what they thought would happen. You also have initial jobless claims up from 197,000 to 218,000, expectation of 200. Real gross domestic product revision is down more than they originally thought, from negative 1.4% for the first quarter to negative 1.5%. The Philadelphia Fed Manufacturing Index is much lower. The print last month was 17.6. The print this month is only 2.6. That doesn't speak well for our manufacturing index, and they were expecting a 15. Leading economic indicators, which is an index, is down. It's negative 0.3%. Existing home sales are down. Building permits are down. Housing starts are down. Retail sales are down, and retail sales excluding vehicles are down. I think we can pretty much say the economy is trending down, and it's predictable because the Fed tightened. They're pulling away the punch bowl. The economic data in the economy is reacting, and the stock market's reacting, as well as Bitcoin as well.
Now, I just interviewed David Hunter, and I'll put a link in the description of the video to that interview because I want to kind of reiterate some of what he was saying. Was he thinks we're actually poised for a melt up in the stock market, because if we look at the sentiment right now, I mean, it's down in the dumps, right where we were, at the bottom typically of many major crashes in the past. So your take on that, could it be that it seems like everyone is bearish on the stock market right now? All of Wall Street is very bearish right now. Could it be that we're actually headed towards a reversal at the moment?
Yeah, I think the Dow is up a little bit today, and some people think there could be a reversal. I mean, when you have over a 20% stock market correction, and yes, the Fed has raised rates and said they're going to taper, but I think this correction is pretty steep given what's already occurred. If you're saying that the stock market is pricing in all the expected Fed rate increases for the rest of the year, then I would say it's probably about where it needs to be, and it probably will start to recover. Because honestly, the Fed's, not going to do this all at once. They're going to stair step it, and they've let themselves an out, Elijah, that said if we get really worsening economic data, and what really they pay attention to is the stock market, because it's the proxy for how people feel about the economy, and what the mainstream media always talks about, they could reverse course and either hold interest rates steady where they are or lower them if they need to. So I do think that the indexes are going to climb back up. As far as David, who's been on my program, I think he espouses something a lot of Austrian economists feel is going to happen. There's going to be one more big melt up before you sort of have the Minsky moment. It's the crack up boom, and then the overall collapse of the markets, which will go in line with the collapse of the currency. If you believe that's going to happen, then yes, there would be one more big melt up before that occurs. And the melt up takes time. I mean, it's not going to be overnight. It could be 6 months, a year, or something along those lines before the big crash occurs. And I think to predict that, you really need to look at the strength of the currency. You can look at the dollar index, which is the dollar against a basket of other currencies, but really you need to look at the dollar against goods and services. And the way that you do that is inflation. So how strong is the dollar for the average American or anybody outside America that's trading them? It's not very strong right now. We still have high inflation. I believe the CPI is a cooked index, in my opinion. They've cooked the books. I proved that in my book I wrote 12 years ago using their own data. And I think it's actually higher than the, 8.3% print that we had recently. But even if we assume it's correct, even when we say, we're 8.3, 8.5, that's a high number. And it means the dollar is losing value. It's going to lose a lot of value. What is that? 8.5 year over year. If you annualize that, what's the loss in dollar? It's a lot. So we're getting to the point at which the dollar doesn't have a lot of purchasing power, and we have to have a lot more. And to have a lot more to push on that string of the economy and to get it going, they're going to have to bring out the helicopters at some point. So I don't believe that they can continue, the Fed, to tighten forever, because if they do, they'll crash the economy. We'll go into a recession. We'll have a deflationary period from an economic output perspective. And then that's when they would have to roll out the helicopters. I think that's the scenario that David is pointing to, probably the most likely one, because I don't think the Fed really wants a deflationary depression. And I think they'll fight it using monetary tools because it's all that they have. They certainly don't have a lot of room in interest rates to do much of anything, which I think is what they're doing now. They're trying to get interest rates up enough where they'll have some firepower, some bullets in the gun by the time we get to that stage that David's talking about. Whether they have time to do that without actually crashing the economy through raising interest rates, we'll see. And I think this is exacerbated by the algorithms, because I think if you had humans at the controls, first of all, we probably never would have gotten this high in the stock market, but certainly there would be more rationale as to what the long-term Fed policy is. I think the algorithms don't see it, though. I think they're trading down just on the news. So it's going to be interesting. It's a little bit different world than we've been in the last 30, 40 years. And given, the algorithmic factors, and given where we are probably at the end of the useful life of the dollar as a world reserve currency with the de-dollarization, all those things going on, it's going to be a little bit different. I don't know if anybody can exactly predict it, but I think David probably has a pretty good view overall, and I agree with him. The timing of it's going to be the most interesting thing to see, when all this really happens.
Definitely. No, when it comes to the global economy and where we are right now, I mean, you named a lot of those bad economic data that's coming out of the U.S. We actually just saw the bankruptcy of Sri Lanka. Your take on this, what caused it? And do you think that kind of similar situation could happen to other countries?
Yes, and it has. So if you look at Argentina, Brazil, Venezuela, Sri Lanka, Saudi Arabia, all of these countries that have had currency issues, is because they're not the world reserve currency. And for years, the U.S. has exported inflation to all these other countries through its trade agreements. So look at the euro-dollar accounts. They're bigger than the dollars held by entities here in the U.S. That's exporting inflation, because you're exporting dollars, and they're more dollars than the GDP. It's grown faster. You're exporting inflation. That's essentially what that means in the simplest explanation. So a lot of these weaker currencies, sovereign currencies, are going to bust before the dollar does. And if you look at the milkshake theory from Brent Johnson, Santiago Capital, the dollar will strengthen before it collapses, because it's the best of the crappy currencies for all intents and purposes. So I do think that the dollar is going to continue to rise while these other ones suffer. And the pattern has been for these countries to suffer as they deal with this situation. And it's not only the export inflation from the U.S., it's the fact that we're in a global recession. Elijah, it's not just the United States. We're all suffering from this. And it's also further worsened by the geopolitical situation that we've got going on with Ukraine and Russia and the reaction to that, and everybody basically banning export of food. You've got palm oil bans. There was an article on CNBC the other day where they had a table of all the countries banning export of key food products, and it was like 10 or 15 countries are banning key food products. So we have protectionism coming back. We have deglobalization of the economy. We have countries trying to protect themselves because they realize what's happening. They see the economic data. They see the weakness in their currencies. They see the bankruptcies happening in Sri Lanka. They see the hyperinflation going on in Argentina and in Saudi Arabia as well. I mean, they see what's going on, and everybody's trying to protect their own. But that just exacerbates the problem because what happens is the inflation is going to surge because you have less availability of products. When you don't have an exchange, Elijah, for products, all of a sudden everything becomes more expensive, and then the market mechanisms you built through globalization don't work. And then what do? You almost become like a barter economy where you'll say, well, I'll give you my palm oil if you give me, some plutonium from my nuclear reactor or whatever the case may be. And it's a regression in the systems that we had for global trading. And that's going to bake more inflation into the cake. And I think we're going to see more currency failures. It
is quite striking what we've seen over the last couple of years in supply chain issues. And with the Russia invasion of Ukraine and sanctions issues with global trade and everything like that, it does seem like things are slowing down. And really, the whole system is becoming less and less efficient.
It's becoming less efficient. And I think it was not as efficient as we perceive. There's a lot of analysis and writing about complexity of systems. And the more complex your system is, the more fragile it becomes. But also the more complex it is, the harder it is to see underlying problems. It's kind of like using the analogy, the dam has cracks in it, but you can't see it on the outside, they're interior. And then pressure builds, and all of a sudden you see a big crack and then you see the dam break. That's essentially the way complex systems work. And we're in a highly complex worldwide just-in-time system with highly flawed economic measurements with currencies that were never designed to last. They were always going to hyperinflate. They always have and go to pure fiat. And governments that have lived off of getting votes from spending more money than we make. And it's kind of like the person that runs up their credit card and then they run up another credit card and then they run out of credit and then they lose their job. That's essentially what's happening to the economy, and it's all breaking down. And I think people are seeing how fragile everything is. And again, going back to one of my original comments, it stair steps up and everybody thinks everything's okay. And then, like you said, it waterfalls down. And we're seeing the waterfall, the collapse of not only the stock market, but of the underlying economic and trade systems is occurring so much faster than their buildup over the last 50, 60 years. It's astounding. It's almost like we're faced, and this is an analogy I saw one author put out last week. We're faced with 8 lifetimes of bad news occurring all at once. And it's just so much for people to take. But that's what happens when complex systems break down. Everything happens very quickly. And I've called this the quickening. We're in the quickening phase. We're in where the things start crumbling and people see how fragile they were all along.
It's very interesting because the clients that are calling us to purchase precious metals are often concerned about their money in the bank nowadays. It seems like there's this shift going on where it's like people want to get the money out of the bank and then also often get forms of precious metal that will be easy to barter with, like junk silver or silver American Eagles, all the ones that are recognizable. It's like, do you sense that shift as well, that people are becoming more concerned about this currency crisis that and the collapse of the global economy?
Yes, and I'll use an example. So the other night I had dinner with a friend of a friend, first time meeting him and his lovely wife. And he's a guy that made a lot of money in real estate and in cryptocurrency, now lives a lifestyle where, he's living off of his investments. No longer has to work a full-time job, certainly very affluent. And he said, Rob, you're a gold silver guy. How do I get gold silver? This is a guy that's completely shifted his thinking from traditional financial view to I need to protect and go into precious metals. How do I do it? Where do I start? He's asking me all these questions. This is an affluent guy. He's basically like, I've been a part of the system. I benefit from the system. It's time for me to get the heck out. And not only that, but he's basically planted his location flag. I mean, he's living down in Mexico now, essentially. So he moved out of Canada. Certainly we've seen all the issues that Canadians have had. And you talk about, bank accounts. When the Canadians froze certain accounts related, to the whole, trucker dispute, using basically equivalent of emergency powers like we would see here in the U.S. I think that raised everyone's awareness of the fact that the government now has a hand into your personal finances, and you may not be able to get your money when you need to. And we're not even talking about the chance of fragiling the banking system in a bank run, which I think we're going to see more whispers of and more mentions of as we get further into this economic crisis, given how leveraged the banks are. And all the losses cascading down from the economy are going to affect the banks and their accounts. The banks are highly levered. We know that. Through their inability to meet Basel standards that have been out since 2014. So, yes, people are more and more getting smart, understanding the risk in the system, not only understanding economic risk, but political risk, banking risk, finance risk. The risk is going up. And that's why I often preach risk management. I'm a risk management guy. For 25 years, I was in technology, but also in risk management type of roles, audit, tech, cybersecurity, those types of things. I counseled, billion-dollar companies, including banks, on business process and dealing with risk. And so I have this big background of risk, and you can see the risk elevated. I mean, it's blatantly obvious for anybody who looks at it. And yeah, I think people are flocking to precious metals. Now, it's not reflecting the precious metal spot prices because that's a derivative price. It has nothing to do with the actual retail trade. But, kind of transitioning into that, and maybe one of the next questions you'll ask me is, yes, even though the prices the gold and silver prices are down from where they were a few months ago, the physical trade is booming, and you can see it on the COMEX. The COMEX registered inventories are less than half of what they were about 15 months ago. And that's a big exchange. It's being pulled off of the exchanges. And of course, we see premiums rising because the spot price, which is determined by derivative trading, paper trading, does not reflect the actual demand. That's why the premiums have raised. So yes, I think, encapsulating all that, yes, people are moving into the precious metals. I've got Bitcoin people moving into precious metals. It's happening. And because I think that they see that they need to diversify away from some of their more traditional investments. And also because Bitcoin's down, I think people see that they need to diversify a little bit. The last point I want to make, and I'm being long-winded here, but Bitcoin is down, going back to what I said before, it's down more than the stock indices. And Bitcoin is not acting as a safe haven like gold is. When we are clearly headed to recession, the stock market is pulling back into a nice low correction here. Bitcoin hasn't acted like a safe haven. It's sold off. And I think people are realizing gold sold off just a baby bit, but year to date, gold is down just a tad and silver's down just a tad. It's nowhere near down where Bitcoin is and where the stock indices are. And it's nowhere as bad as the rise in bond yields. So it's not bonds that are safe haven. It's not currency. It's not the dollar. People are going to gold and silver, and that's why their prices are holding year to date better than some of these other investment classes.
You recently reported on how if you compare what the gold bull market looked like right before the blow-off top in 1980 and what this current bull market has looked like for the last about 20 years, it almost, if you overlay the charts, it almost looks identical. So it's like we could be in the time frame right before this blow off top happens where everyone jumps in. Can you expand on that?
Yeah. So Nick Laird at Gold Charts are a wonderful service of a tremendous amount of historic data on precious metals he's collected that I don't think exists anywhere in the world that you can get as a retail investor or retail trader. Has a chart where he's comparing the 70 to 80 bull market versus the one from 2000 to 2022, and they're almost identical. And yes, we are getting to a point, if you look at those charts, where gold is going to spike. Now we're a little bit ways away. I think we really need a big crash for it to go to that vertical, blow off top, like you said. But it is steadily following the exact same pattern when you overlay it. Now, it has taken longer for us to get here, but again, we're talking about the end of an era. We're talking about the end of the fiat money era where they want to go central bank digital currencies. That's a shift in the currency system. We're talking about end of the dominance of the US dollar. We're talking about de-dollarization. We're talking about the rise of China. We're talking about bifurcation and regionalization of the commodities trading markets. We're talking about protectionism. We're talking about mercantilism returning. We're talking about all those things, a shift in the economic world order. This is huge. And so this cycle is going to play out a little bit longer, but if you overlay the charts, they're almost identical. And yes, I think the same thing is playing out. I think we are going to have another blow off in gold and silver, to the point, Elijah, when I come on your show and I say, you may want to think about selling some of your gold and silver if you don't want to will it to your kids and you want to take some profits from that. And we will get to that point. Now, we're not quite there yet. There's still time to buy it. This is a nice little sideways movement this year in gold and silver. Not up a lot. They're not down a lot. It's a great place to come in and buy if you believe gold and silver a long-term stores value, and you believe we're going to have another blow-off topping in gold and silver, which I do.
Now, on our last interview, there was a viewer who commented this question, and it has to do with the paper versus the physical price of silver. And they want to know, if premiums are so high, why isn't more silver being bought at spot from the COMEX and sold into the supply-strapped physical market?
So it is. Going back to something I said earlier, the silver supplies are less than half of what they were. I'm talking registered, and I'll explain that in a moment. The available that we know can be delivered on the COMEX silver supplies are down about half, about 80 million ounces versus 150-something million ounces from about 13, 14 months ago. So basically, since silver squeeze started, silver has been coming off of the COMEX at one of the most rapid rates in the history of that market. If you look at the history, and again, if you go to Gold Charts or Nick Laird, you can see that. He's got all that data there for you. It's being drained. And what is registered? Registered is what we know is put up for trading on the COMEX. Most of the silver and gold on the COMEX is private storage. Now, the only way to get that off is to offer higher prices. That's just common sense. So, but a lot of that is also could be pledged to other purposes. And just because it's in the COMEX repository doesn't mean it couldn't be used in another contract. And the CME group, which runs those indexes, came out and admitted that in a paper last year. It's been well documented. I put it on my channel where they admitted all of the eligible inventories, which most of the metal sits in. They have no idea if that will ever come back on market because it's privately owned. So you have to strip that out, and you have to only look at what is liquid. Okay, that's the key. And the liquid silver has just been halved in the last 13 to 14 months since silver squeeze. And yes, people are taking 1,000-ounce bars of the COMEX. I did it. Other people are doing it. They're buying 1,000-ounce bars. There are people taking 1,000-ounce bars and slicing them down and selling them in jewelry stores. I'm actually involved in one of those projects. So yeah, people are taking 1,000-ounce bars off. It hadn't happened in gold yet, but it has happened in silver. Now, I think it's happened in silver because there's so much industrial demand for silver. Being such an industrial metal, it's going to come first. But I think we're going to see that with gold too. I think we're going to see, and when you see that with gold, when you start to see gold inventories really come down on the COMEX, then you know that the big money is shifting. Their sector rotating away from bonds and stocks and the dollar into gold. That hadn't quite happened yet. That's why I say we've got a little ways to run before we see that gold, that next big gold leg. But I do watch it, and I do report on it in channel, and I'll have that for people when it happens.
Robert Kientz, thank you so much for your time today. Before I let you go, where can our viewers find you online? And did you have any last thoughts to add?
Last thoughts, just pay attention to your channel and our channel for updates. You guys have a wonderful guest list, and you've been covering it for years. You guys have done a tremendous job at Liberty and Finance of covering the market. And I always tell people to go to your channel and watch because you just do such a good job of covering it. You can find us at goldsilverpros.com. You can find us on YouTube, Gold Silver Pros, Twitter, LinkedIn. We're doing TikTok soon. We cover the markets, not only gold and silver. We cover cryptos. We cover real estate. We cover a lot of things on our channel because we want to give people a well-rounded opinion. And all the information we provide, of course, is free.
All right. Well, it's goldsilverpros.com and the Gold Silver Pros YouTube channel. We'll put in the link. We'll put a link in the description of this video here. Robert, thank you so much for your time, and God bless.
Thank you, Elijah. It's been a pleasure.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.